Good morning, and thank you for being here for the Hedge Invest Newman Credit Fund monthly update. The month of June was quite difficult for us. We had a loss around 2.7%. The vast majority of that was special situation, actually predominantly one, Oi Brazil. We dropped around 4% on between Oi Brazil and Dish Telecommunication, and we made positive returns in excess of 1% on the macro strategy given the bearish positioning. The losses we experienced are very similar to what we experienced through the COVID outburst in March, April last year, and then in previous crises where we keep very high conviction special situation where we see catalyst and high returns going forward, and we keep on making money to absorb such losses on the macro opportunistic trading. Unfortunately, June was a bit of an overshooting on the Oi Brazil bonds. We think there was a very bad misunderstanding from the market of their overall cash position and their plans going forward. We really like the position. The bonds have been marked at 50 cents on the dollar with a current yield of around 20% and the yield to maturity in excess of 30%. The expectation we have on the company is quite positive. The company went through major restructuring. They sold their mobile assets. They sold a stake of their fiber optic telecom equipment to BTIG in Brazil. And the company is now structured in a way where there is this amount of cash on the balance, and we think the company will probably use that to optimize the capital structure and take advantage of the market dislocation. We really like the position. We think it's going to be a major driver for performance with positive returns in the future, and so we decided to keep all of it, and actually we've been increasing on the way down after the 30 points drop, which we don't find justified by either the news or the fundamentals. Away from that, the position on the macro book remains the same. We're very bearish, but we're also very tactical and opportunistic. We are literally exposed to the last minute news about the war, and especially the weaponization of the gas supply coming from Russia. We think is in the rational incentive of Russia to weaponize gas even more. They have two choices pretty much. One is military escalation, and that's very dangerous. The other one is economic escalation, and that's probably much easier given the repercussion they would have on democratically elected governments in Europe, from UK, where the government's already fallen, not necessarily for that, but clearly partially because of the economic background, to Italy, where there's a lot of tension on the political spectrum. So we think gas will probably be weaponized even more, will be reduced, and there will be restriction very heavily on that, and that would impact the overall performance of the markets and the asset classes. If we were wrong and Russia were to change their mind and reduce the military intervention, actually sit around the table for negotiation, and or the gas will be still provided, there will be a major positive, and obviously the market would react very aggressively on that. We're very bearish on Europe because of the picture on the gas. We're quite bullish on US, which is benefiting from sanctions, from their independence on oil and gas and their reliance on domestic supplies. We remain very opportunistic, very careful on the overall macro picture, and we very much like the special situation that are coming up in the market from Oi Brazil, Dish, Twitter on the M&A side, where we had a small short position and in the past, and then we reduced and took advantage of it. So at the moment, we are looking at various opportunities out there and very cautious of the macro picture, but overall we still think there's going to be negative returns on most asset classes between now and year end, and so we prepare for that. Thank you.